Hi, it's Bob Hoopsher, and this is the Gaining Perspective podcast, where we bring you insightful conversations with some of the top thought leaders in the investment advisor profession and investment management industry. I am the founder of Advisor Perspectives and a vice chairman of Vetify. Hamilton Lane is one of the largest private market investment firms globally, with nearly $857 billion in assets under management, providing innovative solutions to institutional and private wealth investors around the world. In this episode, my guest Steve Brennan will discuss the private market opportunity for advisors and high net worth investors. For financial advisors looking to minimize the impact of public market volatility on their clients' portfolios, private equity is a long-term investment vehicle that gives an investor an extended period to invest their money and protect it from the turbulence of the markets. Private market investing can provide gains for high net worth investors who have traditionally focused on real estate and private credit strategies. But many advisors still don't invest in private markets. Steve will discuss the opportunity in private investing, how it works, and most importantly, how to use it in the context of a portfolio. Steve is a managing director and head of Private Wealth Solutions, leading Hamilton Lane's efforts to provide evergreen and traditional private market solutions to the growing private wealth channel. In this capacity, he sets the strategic direction and oversees all aspects of the private wealth solutions business. So, Steve, let's start off by having you tell us about your career path and what led you to Hamilton Lane and your role there now.
Thank you very much for having me today. I really appreciate it. When you talk about career path, it gets me thinking. I've been with Hamilton Lane for almost 21 years now, so it's hard to remember the career path that got me here. But it's been a great run at Hamilton Lane nonetheless. So I actually started in the investment management industry in New York. I spent time at BNY Mellon, which was then Bank of New York back in the day. I spent time at Goldman Sachs Asset Management. And then I'm a Philadelphia native. And as most Philadelphia natives do, I found myself gravitating back home to my Philadelphia roots. And so I started a role with Hamilton Lane just over 21 years ago. More recently, I've sort of evolved to take over our head of private wealth solutions role, where we essentially 4 years ago really expanded our offerings to the high net worth market and build a dedicated practice providing private market solutions to the high net worth market called our private wealth solutions business. And so that's been a really exciting time for us here at Hamilton Lane. It's been a new area of focus for us, as we've largely been focused on the institutional market for the almost 30 years prior to that. And we continue to look to build out solutions and educate financial advisors on the benefits of private markets investing.
Well, let's talk about that private wealth solutions business. What should advisors know about private markets investing?
Yeah, so I think the first and probably most important thing, and I'll focus a lot on private equity investing in particular here, is that private equity is a long-term asset class that requires a lot of education to really understand what you're getting into. The private equity asset class has become far more accessible to high net worth investors in recent years, and it's become more accessible in what we would call more investor-friendly semi-liquid structures. So it's really important to understand that the role that private equity and the private markets can play in advisors' portfolios and the diversification benefits that it can bring to a traditional portfolio. The other thing that I'd highlight is that there's a massive opportunity for high net worth investors and their advisors to invest in the private markets and private equity in general. If you think about it, the private markets are about a $7 trillion asset class today. And we estimate that there's about $86 trillion of wealth tied up in the high net worth market. And so just a small shift of that wealth into the private markets can create a significant growth of those private markets more broadly. And so a real opportunity there in the private markets.
Well, let's talk about that massive opportunity. Why is now a good time to invest in private markets?
Yeah, it's a good question. It's one that we talk about quite a bit. I think that the where we usually start here is we just talk about the long-term outperformance of private equity over public equity. So if we look back over the last 20 years, in each of those 20 years, private equity has outperformed public equity. And if you think about it, that's a period of time where we were going through a pretty significant bull market. And despite that, private equity outperformed public equity in each of those years. And the other thing that we'd highlight, just given the current market environment, is that what we tend to find is that the level of outperformance that private equity can generate over public equity is far more significant in periods of time where public equity is either generating sort of poor returns to average returns. So, kind of the market environment that we feel like we're in today is the market environment that we tend to see the most significant level of outperformance by private equity. And then when public equity is going through a bull market, sort of 15% plus positive returns, that's the period of time where you see private equity outperform, but it outperforms by the least. And so you could see outperformance in the order of magnitude of 600 to 800 basis points when public equity is generating returns that are, say, poor to average. And the level of outperformance when public equity is going through a bull market can tend to be in that sort of 0 to 1% type of outperformance. And so we tend to think that over the long term, private equities outperform public equity. It's a long-term asset class, and it's a good time to be invested today.
So, can you quantify what the opportunity is for a high net worth investor, given that history of outperformance?
Yeah, sure. So I think it starts with this idea of just the opportunity set that's available in private equity compared to public equity. And so we're in an environment where the number of public companies has been shrinking for the last 20 plus years. Companies are tending to stay private far longer in this market environment than they ever have before because the private equity asset class has grown so much that private equity funds can support the growth of private companies far longer than they ever have before. And so, if an investor wants to get access or exposure to the full scope of the economy, they need to get some exposure to the private markets. If you think about it, the number of private companies with revenues over $100 million around the world dwarfs the number of public companies with similar revenues. There are roughly 95,000 private companies globally that fall into that bucket compared to only 10,000 public companies with revenues over $100 million. And so the opportunity set is massive for high net worth investors to get exposure to private equity. And we think that the impact of high net worth investors adopting an allocation to the private markets will dramatically increase the size of the asset class overall. So based on those stats I talked about a little bit earlier, if you just saw a 1% increase in the average high net worth investor's allocation to the private markets, it would increase the size of the private markets overall by over 10%. And so that gives you some sense of the scale and impact that the high net worth investors could have on the private markets.
So, you've made a very compelling case for private equity, but private equity has also come under scrutiny. There are two recent books. One is called Plunder: Private Equity's Plan to Pillage America by Brendan Ballou. And these are The Plunderers: How Private Equity Runs and Wrecks America by Gretchen Morgensen and Joshua Rosner. We're publishing reviews, actually, of both of those in the coming weeks. The common thesis of those books is that private equity firms enrich their general and limited partners, but do so at the expense of employees, customers of the firm, and the communities where they operate. That was the same criticism that was leveled against Mitt Romney in 2012. What guidance do you offer for advisors who are concerned about this or whose clients may raise those same issues?
Yeah, it's a good question, and I certainly agree that these criticisms aren't new and they've been leveled against private equity for years and years. I think what you're starting to see is that as private equity has grown very significantly as an asset class and become more accepted by both institutional investors and high net worth investors, you're going to see publicity like this and books like this being written. I think generally our view is that the governance model of private equity, where a private equity general partner typically owns the majority of the company that they acquire, controls that board of directors, and can directly implement strategic and financial initiatives, is a really strong form of ownership. We tend to believe that the long-term sort of active management private equity philosophy can produce stronger operating results and fundamental performance for companies generally. Um, but the reality is that this is a large asset class. Hamilton Lane, for example, we've got a database of over 50,000 private equity funds that we monitor and over 130,000 plus private companies in our database. And so there are going to be lots and lots of successes within the private equity landscape. And then there's going to be some cases where companies didn't perform up to their expectations. And that's where you're starting to see some of this publicity. What we would tell advisors is that they need to do their due diligence, sort of get educated on the asset class, make sure that their clients become educated on the asset class, and really have a clear understanding of what they're investing in and what their objectives are. And if they do that, they can benefit from some of that long-term outperformance that I talked about earlier.
Let's pause for a couple of minutes for a word from our sponsor. I know that you already enjoy our content from Advisor Perspectives every day, so why not use our award-winning articles, commentaries, and charts to streamline your communications with clients and prospects? My team and I introduced AP Premium last summer, and we've been blown away by the response from the advisor community. Keep listening for an exclusive code to get $10 off our premium service. You won't find the in-depth, sophisticated market analysis and charts like Advisor Perspectives anywhere else. This information can be invaluable to help your clients understand complex topics. Let's say a client asks a question about their estate plan. Instead of spending time researching and drafting a long-winded response, quickly grab any number of related articles from our library and share it in a personalized way. AP Premium gives you the power to add your logo and a personalized message to any piece of content and share it directly with your clients and prospects. We also introduced a premium offering called the Ask an Expert webinar series. At our inaugural session, we were joined by Wade Pfau for an intimate Q&A. Advisors have told me this is one of their favorite perks of being a premium member, and we can't wait to share who's slated to join us next. Give Premium a try and see for yourself why it pays to be a premium member. As always, we appreciate your support of our efforts to bring excellence to financial journalism. And as a thank you, I'm offering a one-time $10 discount for new premium members to be taken off your first monthly or annual payment. Just go to advisorperspectives.com/member. That's advisorperspectives.com/member and use the code podcast 2022. That's podcast 2022, all caps, at checkout. And now back to our podcast. Let's talk about the growth that you mentioned. It's a huge number of private equity funds. I didn't realize it was that large. What are the key drivers of the market growth?
Yeah, so it's a good question. I think when we think about the key drivers of the market growth, and we think about it in the context of high net worth investors, I think you've probably heard a lot of talk recently about the democratization of the private markets. And basically what that really is it's talking about increasing the accessibility of the private markets asset class to high net worth investors. And the way that that's happened over recent years is a few different ways. You've seen some tech-driven platforms that have increased the accessibility of the private markets that essentially allow investors to digitize and streamline end-to-end processes that have always made it really challenging to access the private market. So that would include things like streamlining the subscription process, the reporting process on your private market investments, the capital call process and the distribution process that are all things that have made it challenging for individual investors to access the private markets. And so there's been some technology advancements that have streamlined those processes. The other thing is that there's a series of new products that are available on the market that are pretty innovative when it comes to providing some benefits to high net worth investors that they would be looking for when it comes to the private market. So these would fall into the category of what we would call semi-liquid or evergreen products that offer, in many cases, the ability for investors to get liquidity periodically through their private markets investments. That also dramatically decrease the investment minimums that investors had typically faced when trying to access the private markets, and then also can do other things like improve, tax reporting, providing 1099 tax reporting instead of the traditional K1 that an investor would have faced when accessing the private markets historically. And so I think those types of things are really the key drivers to increasing accessibility of the private markets and allowing high net worth investors to get exposure to private markets in a much more efficient manner than they ever have been able to before.
So let's talk about how advisors can take advantage of this opportunity. What do you need to really be successful in this market?
Yeah, so I think the first thing that we would talk about would be you would need a long-term approach. While private equity has become far more accessible to high net worth investors than it ever has before, it's still a long-term asset class. There's still a large degree of education involved for advisors and their clients to really understand what they're investing in and the role that private equity can play in their portfolios. What we would recommend is, you need to find a strong partner who could provide access to the private markets in a diversified way, and maybe multiple partners. As an advisor, you should really start with what's important to your client and try to find opportunities that meet those needs. So, for example, we just talked about trying to find opportunities that offer a lower investment minimum for high net worth investors so that they may be able to diversify their exposure into the private markets. They may be interested in a semi-liquid or evergreen solution that allows them to get their capital invested in a much more timely manner, so be fully invested into the asset class on day one, and structures that ease that administrative burden that we talked about earlier. Liquidity is also a key theme. Traditional private equity funds for years and years only provided liquidity when an investment was exited and the general partner would send back the proceeds of that investment to their limited partners. These more semi-liquid offerings offer liquidity as frequently as on a quarterly basis, subject to certain restrictions, to allow investors to lean in or lean out of the asset class when appropriate. And then finally, a huge item that we're seeing is the tax reporting. I think investors who have experienced getting K1s from partnership investing historically have not found that to be a great experience. And so many investors really are attracted to some of the 1099 tax reporting structures that some of these semi-liquid or evergreen offerings have made available to investors.
What other questions should I have asked, but I didn't ask?
Yeah, so I think what I would highlight is that private equity is a growing and evolving asset class. It continues to grow significantly, and while there's been historic outperformance by private equity over the public markets, and there's also an ever increasing number of investment options that are available to high net worth investors when they think about accessing the private markets. There will be lots of success stories out there, but there will also be lots of challenges. And so I think our focus in this asset class is to broaden education, really tell advisors that they need to dig in on due diligence and provide diversified options for their clients. And while private equity as an asset class may be new to many advisors, it's not a new asset class generally. So there are practitioners that have been out there for 30 plus years, like Hamilton Lane. So advisors should be looking to build relationships with private equity and private markets managers, understand the asset class as best they can, and then really dig in on that due diligence to understand what their clients are investing in. And I think that they can create some really positive outcomes for their clients that way.
If there's one key takeaway that you would like to leave with our audience of financial advisors about the diligence that they should perform on a private market investment, what would that be?
Yeah, I guess I would certainly underscore the point that there's a massive opportunity out there for advisors and their clients in the private markets. We are incredibly excited about the opportunity there. We provide, a huge amount of research and materials for advisors to help them navigate the asset class as the industry continues to grow and open up to a broader set of investors. I think the key would be to really understand the types of investments that they're analyzing for their clients. Start broad with a diversified offering. And then over time, they can look to focus in on particular areas of the market that may be appealing to them or to their client, but build that core base of exposure to the private markets asset class through a diversified offering, get to understand the asset class and how it works, and then maybe look to create a more focused or segmented approach to the asset class, targeting certain areas that you find particularly attractive, and really build strong relationships with the managers that you get to know in the asset class. Focus on education, and making sure your clients have a clear understanding of what they're investing in and the long-term nature of the private markets asset class.
Well, we'll include some links in the notes that accompany this podcast where you can learn more about Hamilton Lane. There'll be a link to Hamilton Lane's 2023 market overview, a link to its guide to private markets, a link to Hamilton Lane's Private Wealth Knowledge Center, and a link to Hamilton Lane's website. Steve, is there anything else you'd like to add?
No, just a big thank you to you, Bob, and to Advisor Perspectives. I really appreciate the time. At Hamilton Lane, we're committed to working with advisors and their clients to provide private market solutions and help educate them on the benefits of the asset class. And we look forward to continuing to do that for many years to come.
Well, thank you for listening to the Gaining Perspective podcast with Bob Hoopsher, today featuring Steve Brennan of Hamilton Lane. To support our podcast, please share, subscribe, or leave a review to help make our podcast more findable for your friends and colleagues. You can subscribe to Gaining Perspective on iTunes, Spotify, and Stitcher.